Well, hello and welcome to Business Today Television. I'm Karishma Asoodani and you are watching this special edition focused on the economy. Well, the International Monetary Fund, which is the IMF, last week revised India's economic growth forecast for FY26 downward from 6.5% to 6.2%, citing rising global uncertainty and trade tensions. To help us decode what this means and take a deeper look into the outlook, I'm joined by Mr. Krishna Srinivasan, Director of the Asia and Pacific Department at the IMF. Krishna, thank you so much for joining us. It's early morning there in DC. Krishna, let me begin by asking you that India's growth forecast has been revised. Could we see an upward revision if domestic consumption strengthens?
So clearly, we have revised our forecast for India from 6.5 to 6.2 for this year and 6.3 this year, next year. These revisions, in the bigger scheme of things, are small compared to how we have revised other countries, and these are partly related to the trade tensions and the trade uncertainty. So clearly, if there is a big improvement in domestic demand, for example, if investment picks up in India, that's an upside risk, right? And the potential for investment to pick up is there. So clearly, if investment picks up or if consumption demand strengthens, that could be a big upside risk for India's growth forecast. But at this point in time, we have lowered it down to 6.2 for this year and 6.3 for next year.
Okay, you did talk about investment picking up, and Krishna, I'd like to get back to what you also spoke recently at the spring meeting where private investment remains a concern in India. Now, what are the key bottlenecks holding it back according to you?
So if you look at private investment itself as a share of GDP, it compares reasonably favorably with the other emerging markets. But where it's falling short is on investment in things like equipment and machinery, which are important for productivity and so on. That's not picking up in India. So that's important. And it's again, it has been picking up a little bit, but we would like to see it much stronger than what it is right now. And there are significant areas where reforms could be deepened. For instance, we've talked about this in the past too, that India is one country where there's been significant amount of trade barriers, both tariff and non-tariff barriers, that could be alleviated. So that provides an impetus for investment. At the same time, you could think in terms of what needs to be done on labor codes, because if you want to compete with China, you need to be firms in India need to be able to scale up. And that's not possible with the kind of labor codes we have right now. So the labor reform needs to be done. It's been in the works, but that needs to be implemented. The impetus on infrastructure needs to continue. And going beyond these reforms, I think we've done some work in our recent report on India, where we talked about reforms on the judicial side, talked about land reforms. So there are many reforms which are needed. But I would say if you want to start right now, you have to think in terms of trade liberalization, continuing the infrastructure impetus, and do the labor reforms. I think these will be very important if Indian firms have to compete with China going forward.
Krishna, very interesting. Infrastructure policies, labor reforms, continued expenditure and investment. India now is also looking at deregulation. It's something that they've been looking in a federal setup. Do you think that could help them emerge as a beneficiary of the ongoing US-China trade tensions?
Yeah, I think any kind of, we've talked about the fact that some of the reforms we need are deep structural reforms, and that's important. That goes to deregulating the economy. That's very important. I think there's a slew of reforms which need to be done to get investment going on a more durable basis. And what I said is the three things that I pointed out are something which can be done quite soon. And then you have these other reforms which might take longer, but still you need to begin on those in terms of the land reform, in terms of reforms of factors of production. The land reform is important. Think in terms of judicial reforms, that's important. All these are issues which have to be looked at in a more holistic way. And so there are, if you look at our report, Karishma, which we published less a month ago, we have laid out reforms which can be done in the short term and reforms which can be done over the medium term, because there is a certain amount of capacity constraints. There are those issues which need to be taken into account. So that's why we have our reforms broken down into what can be done and need to be done in the very short term, and those which can be done over the next few years. So it's a constellation of reforms, but you have to prioritize given capacity constraints in the country.
Right. And do you think working on these reforms will present India a real opportunity to be China +1 or even say China +5, because it's also a silver lining for other countries like that of, you say, Vietnam or Taiwan?
Yeah, I think so. If you look at over the past few years, we have observed notable adjustments in the trading patterns of major economies in Asia as bilateral trade barriers between China and the US have increased. So you see some countries like Vietnam have benefited from trade, diversion, or what you could call as trade alignment, realignment. So in that context, India clearly can compete, can do well, can take over space which has been vacated by some other countries. But for all that, you need to have these reforms, which I talked about, because that's important to make sure that that you can fill in the space which has been vacated, and that you can do that on a durable basis. And so the reforms I talked about are important, whether you think in terms of a China +1 or China +5 strategy.
Right. Krishna, could you give some idea of the sectors that you think has performed well in India, and going ahead could be its strength when especially it's finding an opportunity in increasing its trade with the US?
So the area where India has done really well is on services. On services, exports have really boomed. And in fact, that's one, I think if you look at our balance of payments, the contribution of service exports have been very, very impressive. So I think that should continue. And for that to continue, India needs to again invest in capital, in building skills. Investing in human capital is very, very important, whether it's for beefing up our service exports now or to address the challenges faced by AI. I think it's important that we continue to invest in human skills. At the same time, I think given the fact that India needs to create 8 to 9 million jobs every year, depending upon what estimate you use of how many people are being added to the labor force, it has to also continue making strides in manufacturing. And there again, there are opportunities which are being presented, including in the context of China +1 strategy and so on. But for that, you again need to do these reforms. Some of the reforms are universal across, services and manufacturing. If you want to invest in human capital skills, I think those are very important. Skilling the labor force is extremely important, both for manufacturing and services. But if you want to focus on manufacturing, some reforms are even more important, like ones I talked about. So yes, India has done very well in services exports. It's need to both diversify, strengthen that to begin with, and then diversify, including into greater manufacturing. If you look at contribution of manufacturing to the economy, it's stalled in India. It's really actually come down. You compare that with Vietnam, where the share of manufacturing in GDP has been rising. So we need to catch up there. And I think the reforms I talked about will help you in that direction. I think the one point which I'd like to make is that companies need to see policy predictability, and that's where things like these quality control orders, which were introduced in India, those actually go in the opposite direction. And so the smaller firms need to be on a good footing to compete both domestically and internationally. And so those policy predictability is important. Liberalizing your trade, removing trade barriers, both tariffs and non-tariff barriers are important. So those are issues which cut across both firms that compete in the manufacturing thing and in the service thing. So those are things which need to continue.
Okay, Krishna, as we come to the end of this interview, I have a final question for you, and this is more on the outlook towards the Asia-Pacific region. In the current scenario, do you see this being the geopolitical scenario? Do you see it being a major challenge for other economies, see it China or Japan or even South Korea, besides India?
So, Karishma, we have lowered our forecast for Asia to 3.9% this year and 4% next year, right? And this represents a cumulative reduction of 0.8 percentage points compared to what we had said in October. And that represents markdowns across a bunch of countries. We've marked down China to 4% this year, and next year we've marked down Japan. More importantly, we've marked down the projections for the ASEAN economies. And within the ASEAN, there are some countries which are being hit particularly hard both because they are exposed, highly exposed to what happens to the US and what happens elsewhere, external demand. So, and that plus the fact that they've been hit hard by tariffs, makes the fact that we have revised growth projections for these countries also. So across the board, we have, lowered projections. For some, it's much more than others, but Asia, which is, contributed 60% of global growth last year, right? And that is now getting hit quite sharply, both because of the trade tensions between the US and China, but more importantly, the tariffs which have been imposed across the board, where Asia has borne the brunt of these tariff hikes.
Right, and the next 3 months could very well change the situation if there is another decision that's coming.
Yes, and we would like to see move towards a more clear, predictable, and stable trade environment. So we're encouraging countries to reach out, to make collaborative, to engage collaboratively, to think in terms of regional integration, cross-regional integration. All that will help, offset the trade tension we're facing right now and the uncertainty we're facing right now.
Thank you very much, Krishna, for speaking with us and joining us on Business Today Television. It's been a pleasure speaking with you.
Thank you so much, Karishma.
Well, that was Mr. Krishna Srinivasan, who is the Director of Asia Pacific IMF, speaking about what is the future forward path for India in terms of its growth estimates, and also what is the challenge and opportunity lying for the Asia Pacific region amidst the whole tariff imposition that has come in by the US president. Keep watching Business Today Television as we get you more.
Hello and welcome. You're watching Business Today Television.